different parts of the country? And more specifically, where do you do business?
Absolutely, absolutely. So probably a good place to start answering that question is, what is industrial real estate? So industrial real estate is basically real estate, and specifically buildings that serve manufacturing, research and development, storage, and distribution functions for companies. So, the industrial real estate example that probably hits closest to home for all of us is Amazon. I'm sure that we are, honestly or embarrassingly, using Amazon once a week, and those packages are delivered to your door, and they come through multiple industrial buildings. So Pattillio Industrial Real Estate is a company that focuses on the acquisition, development, leasing, and operating of industrial facilities, and we've been in business for 60 plus years. With our headquarters in Atlanta and buildings located throughout the Southeast, so Georgia, Florida, South Carolina, Tennessee, and Kentucky. So in terms of our services, we have two main development functions: build to suits, which we design and build specifically for tenants. So on the PowerPoint, you'll see an aerial of a building in the bottom left that was specifically designed and built for BMW in Jacksonville. And the picture on the right is an interior snapshot of the building while it was under construction. So BMW came to us with a specific set of building specifications. They wanted to be in Jacksonville. To give you an idea, parts come from Germany, across the Atlantic, through the port of Savannah, and then they're distributed down into the warehouse here in Jacksonville. And then parts are then further distributed to various dealerships in Jacksonville. So if you're driving a BMW, your transmission goes out, you live in Jacksonville or Orlando, North Central Florida, you go to your dealership, that replacement transmission came through that warehouse. So that's an example. The other example is speculative buildings. So we build vacant buildings for potential tenants in hopes that they will lease them. And the reason there is not every company has 12 months to have a building specifically built for them. You probably have heard that Amazon has taken tens of millions of square feet of industrial buildings recently during the pandemic, and they weren't waiting for buildings to be built. They had immediate needs. So existing buildings, speculative buildings, primarily filled that.
Okay. Now, could you give us some examples of some specific buildings you've built in Georgia?
Absolutely. So here are a couple of speculative buildings. The two on the right were built in Georgia. They're currently available and vacant. So the first one is in Hall County, Oakwood, just south of Gainesville. It's 300,000 square feet. It's a distribution facility that could also go manufacturing. So it's important to note the difference between manufacturing and distribution. Manufacturing is generally, there's a level of production going on. There's heavy equipment, there is cranes, there are assembly lines. Distribution is mainly racking, and it's meant for storage and distribution to end users or to last mile facilities. So the building in the upper right is located in Hall County. Hall County has traditionally been a great location for manufacturing users, given the employment base, given the incentives that Hall County offers manufacturers. And so that's been the strategy there. And then the one on the bottom right is located in Noonan off of 85, just south of the airport. That has been primarily a distribution market. I-85 is the primary distribution corridor through Atlanta. It runs north-south up the eastern seaboard, opens Atlanta up to a lot of markets. So we're hoping that a distribution user will take that space.
Okay. I'd like to talk a little bit about actually the construction process and building a building like what we see on the screen here. How far in advance does your company have to plan for things like crane rentals and crew availability? And are you running into situations where you can't find, or the construction arm can't find workers to actually complete these projects?
Yeah, that's a good question. So we hire third-party general contractors to build our buildings, and they handle the hiring of construction trades. And that pricing process will start well before we put a shovel in the ground, obviously. And we have experienced material shortages in the past and labor shortages in the past that have affected availability. Conversely, in times when there's less construction going on, less demand, we've been able to get better pricing. A good supply and demand example that I actually read about not too long ago, and thankfully, we don't use a lot of lumber in our buildings, but the apartment industry and residential construction does. And slowdown in logistics due to COVID, wildfires on the West Coast, trade tensions with Canada, all have caused lumber prices to go through the roof. So it's a good supply and demand example, but those are things that we are watching. Our contractors do watch and do affect the cost of our buildings and timing.
Okay. So this image you're showing now, the Cartersville Business Park, is this, I can see Chick-fil-A's name on it and AST Industries. Are the other two buildings speculative, waiting for tenants?
Yeah, so this is an example of an industrial park. So we bought this park, 188 acres, in 2010. So the first building we actually built in this park is the single tenant building that says 265,000 square feet in the upper left. We built it speculatively, so hoping we would find a tenant to take that space. And Zepp Chemical came along, one of the largest chemical manufacturers and distributors. They came along wanting a build to suit. So we had the land obviously available, but they needed some temporary space. So they took that 265,000 square foot building, and we built a building specifically for them while they, which is the 592,000 square foot building in the lower right-hand side of the park. So once complete, they moved out of that 265,000 square foot building and into the building that we built specifically for them. Then we backfilled that 265,000 square foot building with Mohawk carpeting and flooring, one of the largest flooring manufacturers, and then Chick-fil-A took half of it. So the reason why Chick-fil-A took half is because we sold them the land across the street so they could build a regional distribution facility for themselves. So once complete, they moved out, and then Mohawk actually took the balance of that building. And then pretty early on, we sold the building to Asta, sold the land to Asta, and they built their own building, which is an overhead door manufacturer. So this is a good example of 10 years later, we've gone through the majority of the park. We have one available site left. This is in Bartow County, so up I-75, and sort of shows you the life cycle of our parks and the various usage, all the way from Chick-fil-A to flooring and chemicals.
All right, and I noticed I can see Interstate 75 right there and exit 296, I guess it is. Can you talk a little bit about the importance of Georgia's transportation infrastructure network in relation to your business? Because I know there's some middle school teachers on the call, and specifically in 8th grade, they are required to teach about Georgia's infrastructure. So from your point of view, how important is our fantastic infrastructure network in Georgia?
Yeah, so that's a great question. I'd say Georgia's transportation infrastructure plays a significant role in a company's decision to locate in Georgia, which drives our decision, frankly, on where we build our buildings. It's important to delineate between distributing and manufacturing, because that affects where you locate, obviously. But distribution, we talked a little bit about it, but that would be Amazon, Wayfair, Walmart, Home Depot, Lowe's, distributing to end users. Big focus on access to highways. And then on the manufacturing side, it's examples are Kia, and we talked a little bit about it before we started this webinar, but Kia and LaGrange and Caterpillar in Athens, where skilled labor incentives are driving that decision. So on the distribution side, it's very important to have a strong transportation network. So this slide talks a little bit about that. You'll note that there are 1 million trucks on Georgia's highway that cross the state each week. And Georgia's interstate infrastructure is key to companies locating in Georgia and accessing other parts of the country.
Okay.
The other aspect is the Port of Savannah. I don't know if you guys have seen this, but the Port of Savannah now is the busiest port for exports in the nation. It's always been in the top 4, always behind LA, but with the pandemic and Georgia opening up faster than some other states, and the pro-business environment has really catapulted Savannah. And another big reason why companies locate their operations to Georgia.
That's unbelievable. Yeah.
And lastly, the airport. You can reach 80% of the US within 2 hours from Atlanta. So there are a lot of options coming out of Atlanta, not only from an air cargo perspective, but corporate relocations and having your employees travel. Hartsfield-Jackson is a huge asset and a big driver.
Okay. You mentioned a second ago the Georgia's pro-business environment, and I want to get a question about taxes, which I might have messed up your slide order here, but speaking about tax abatements and tax credits, do you help future or current tenants in your buildings seek these tax abatements in the various locations where you're building, or is that something that the companies themselves are sort of left to do?
Yeah, so tax abatements, tax credits, they're known as incentives. They're a big part of the decision-making for a company when selecting a location. We do maintain relationships with economic development officials. A lot of the larger companies are already plugged in, but they range from property tax abatements, for example. That's a direct discount on property taxes. Tax credits generally are tied to employment. So something like $3,000 for every new employee a company hires. And then there'll be direct investment from municipalities. So they'll put in road, sewer, fiber optics, and spend real dollars to attract companies. I do think it's important to note that at some point there can be too much in terms of incentives. So state and local governments have to weigh what they're willing to do and do a cost benefit analysis, because companies can really set a very competitive process. They can pit state against state and county against county and city against city, developer against developer, contractor against contractor. Some states could get away with not offering as much because of certain assets, i.e. Georgia having a port and airport and existing skilled labor force, but there's also demands on Georgia's infrastructure that, Little Rock, Arkansas, not to pick on Little Rock, but they may have to offer some more incentives because they don't have a port. They may not have some existing infrastructure, but at the same time, they're not necessarily worried about burdens on existing sewer lines and road networks and that sort of thing. So those are all things to consider, but a very big part.
So in the different states you guys operate in the Southeast, are there radical differences in what states are offering as far as incentives go, or are they all kind of in the same boat? No pun intended.
Yeah, no, that's a good question. It depends, but the Southeast Sunbelt markets are generally pro-business and generally will offer some mix of those incentives that I just outlined: property tax abatements, tax credits, and direct infrastructure spending. Probably one and two in the more developed markets. The direct infrastructure spending probably a little bit less in Atlanta versus maybe a more secondary tertiary market in the Southeast.
Now, you don't have to name names and get too specific, but within Georgia itself, are there certain regions of the state that are a little more easier to work in and with than others? I mean, discounting things like, mountains and geography, but just overall, is it just as easy to get roads and sewer built in Northeast Georgia as it is in, the southern part of the state, for instance?
No, so yeah, municipalities are very different, and it can be night and day just within Metro Atlanta. A lot of it can center around local city council leadership, incentives. The robustness of the economic development group within a certain county versus another. So it can vary a good bit.
Okay. All right. Chris, any questions in the chat box we want to ask now?
No, not yet. No, everybody's
Okay.
listening intently.
Okay, cool. All right. All right. So next thing I want to talk about is efficiencies. Can you give us some examples of how Pattillio was able to improve your efficiency, considering your logistics and manufacturing to sort of, make yourself better and leaner and meaner than you were, 10, 15 years ago, or even 5 years ago?
So yeah, when we use the term efficiency at Pattillio and in the logistics environment, it's a common term, and it covers the gamut of supply chain, manufacturing, storage, and distribution. So the term efficient typically means to speed and cost, right? Speed and cost of sourcing goods and services, distributing your goods and services to customers on time and efficiently, and doing that in a cost-effective manner. So how do we do that at Pattillio? We do that by being able to deliver industrial buildings that have the capacity and the technological capabilities to meet all these goals. And we make sure to buy land in locations that can service these distribution networks and are within employment bases that have skilled labor to contribute to the employment of these companies so they can manufacture and create goods.
All right. So I mentioned you're sort of always speculating on real estate and where the next, hot place will be to manufacture things. Let's say hypothetically you buy a piece of land in County X 5 years ago and you realize, gee, no one's coming this way. I'm assuming it's zoned industrial. Could you then turn around and try to sell it to like a builder where they would build homes, or do you just kind of hold it hoping that it'll come back someday?
Yeah, no, that's a very good question. So if it's land, it can be a little easier to deal with, right? You can always go make a case that the highest and best use for this land is residential, and you go in front of a zoning hearing in the local municipality and neighborhood hearing and that sort of thing, and you can work through that. But if it's an existing building, you've made the capital investment, it becomes a lot harder. So maybe it's not leasing, but maybe there's an owner manufacturer that could use it. Maybe there is another potential use for the building. Maybe you could convert it into self-storage. Maybe you just have to hold it longer. But that's why it's so important to do your due diligence on the front end and really understand the supply and demand and what companies want, because you can make a pretty big investment and have to hold it and carry it for a while.
Okay. All right. So, obviously, we've all seen the impact the pandemic has had on the economy since late March. What have you been seeing in the industrial building space during this time?
Yeah, no, that's a good question and a common question. So at the outset of COVID, call it March, April, there was definitely a slowdown in corporate decision making. So the decision makers of our tenants were faced with a lot of uncertainty. And when you do that, you're focused on protecting your balance sheet and not necessarily spending money to expand and grow. So we saw a lot of them that were interested in leasing our buildings in Georgia hit the pause button, hit the stop button. However, as the world settled into this new environment, a couple of things really became apparent. One, prior to COVID, more and more people were buying things online, and COVID just accelerated that. So if you look at, I've got a graph of e-commerce trends. So the lines here show e-commerce trends quarter over quarter, first quarter over quarter, and you can see a significant spike from first quarter 2019, first quarter 2020. And so there was 212 billion roughly in e-commerce sales, which is 32% growth and represents over 16%. E-commerce represents over 16% of total retail sales. So that's one trend. The other trend is companies are starting to rethink their reliance on China for their supply chain. So with the disruption caused by COVID and the trade war, frankly, that was going on before COVID, people were pivoting to a China plus one strategy. So, for example, Vietnam was a big beneficiary, is a big beneficiary of this shift, given its proximity to China and fast-growing economy and network of 114 some odd ports. Companies are also considering onshoring, which is bringing manufacturing back to the U.S. And also nearshoring, which would be bringing your supply chain closer to the U.S. So from Asia, Mexico is poised to really benefit, given that it's made a lot of progress with the U.S. in terms of trade agreements and has a low cost of labor, and its proximity to the U.S. makes distribution just a lot easier, supply chain a lot easier, because you have less miles to travel and no oceans to travel. So the net result is, it depends on which talking head you listen to, but over the next 5 years, a net need of 1 billion more square feet for industrial. So we're definitely bullish and have a positive outlook on what industrial will be like going forward because of these.
So looking at these two charts, and you know that number to the right is just, it's incredible how quickly this has happened as far as retail sales go. How many people in your company are like on the phone with Amazon and Walmart all the time? And how many competitors do you have that are sort of also calling them, talking about building sites for them?
Yeah. No, that's a good question. So Amazon and Walmart are focused on very large distribution centers. So 1 million square feet, roughly. We have a couple of sites that can handle 1 million square feet. We have a couple of spec buildings that are in that 500,000 square foot range. But so in terms of the current demand that Amazon has had throughout COVID, it has been an immediate demand. So we have not participated in as much of that. We're constantly talking to brokers that are representing Amazon and Walmart. Typically, Amazon and Walmart are not outsourcing space directly. They're hiring brokers to do that. So we're definitely in front of them. We are definitely tailoring our newer developments, or at least considering specifications that these larger users, Amazon and Walmart, would want in buildings as we think about our next wave of speculative space. So we do have Amazon as one of our tenants currently. And like most industrial developers would like to increase our exposure there.
Okay. As we've been on this call, in my cul-de-sac, 2 different Amazon trucks have turned around, by the way, as I'm looking out the window.
It doesn't surprise me. And I wonder how many people have ordered something on Amazon while this has been going on.
Raise your hand, teachers, anyone? Sure. Okay. Again, along the same lines of these companies that, they need buildings, about how many months or years in advance do your projects usually take under normal circumstances, I guess? There's probably a different number for distribution versus manufacturing, right?
Yeah, no, I would say that you would add some time for manufacturing because the specs can be specifications can be more intense, but typically I would say 12 months from start to finish. If we own the land and that land is entitled and zoned industrial, there's nothing crazy going on with the site in terms of it's a graded site, it's ready to go. Now we can have a larger investment. So let's go back to Cartersville Industrial Park for a moment, Cartersville Business Park. That was purchased in 2010, and we're 10 years into that investment. We've sold 2 parcels of land. We've built 2 buildings, and we still have 1 more site to go. So it depends on the scale of the investment, obviously, and what you're trying to do. But a single rifle shot deal can be done in 12 months.
Okay. Our organization works a lot with the Japan American Society of Georgia, and one of the things they're always talking about is the number of Japanese businesses that are located here. Do you have people on your staff that are actively doing work in other countries recruiting, or is that something more left to the state of Georgia itself?
Yeah, so the state of Georgia really runs point on that. So we have new investments people that are staying in front of economic development departments across the state. So they're keeping their pulse on those opportunities. We do have several Japanese companies in our portfolio and have built for several Japanese companies. We definitely track that through our relationships with the state and with the brokerage community.
Okay. So looking ahead, if as much as we can in this bizarre climate we're in, what kind of projections for building anyway? What kind of projections has your company made for the next couple of years, if you can talk about that?
Yeah, so we haven't made a specific number of buildings or dollar projection because as a private company, we have the benefit of reacting to the market. If there's a demand that needs to be filled, we can hit the accelerator. If not, we can hit the brakes. But we are very bullish on the Sunbelt markets. So Georgia, Florida, Carolinas, Tennessee, Kentucky, especially the Central Florida area, so Tampa, Lakeland, Orlando. Those are on our growth horizons and those markets. So we will be looking at speculative development in all of those markets at some point over the next 5 years, and that will be driven by demand. Will be driven by how quickly our existing speculative buildings lease, and then also if we have tenants that are interested in built-to-suit opportunities, where do they want to go? And that will be in that consideration as well.
Okay.
Mike, can I jump in here real quick? Because Joel has a question that's very much in line with that. The question is, and you may have hit on some of these, what lagging or leading indicators do you guys use for planning growth? And he wants to know, is it things like workforce assessment, commercial property taxes, new firm starts, et cetera?
Yeah. So population, that's number one. Population trends are a big driver, big indicator of industrial real estate demand. So we spend a lot of time focusing on that. Florida is a big market for us. Florida adds 1,000 people a day, one of the top states population growth. And then so you start with population, then you look at the business-friendly environment, no state income tax. And I use Florida as an example, but Georgia has, you know, a lot of these similar characteristics, and why we're bullish on Georgia as well. But to answer your question, population.
That's a good one. And Tiffany has a great question here that I was curious about as well. And that is, with the increase in demand for industrial real estate, what kind of environmental concerns are there for the sector, and how are your new construction projects, how are they regulated by environmental agencies? And so just in general, the environmental impact of what you do, because you're taking up a huge chunk of land with a concrete slab. I imagine there's some environmental impacts there.
Yeah, no, so it's a great question. So, you know, we rigorously follow all EPD requirements. And so before we break ground, we are, you know, doing a phase 1 and a phase 2 environmental assessment. And if there are, you know, any impacts that we need to consider, whether it's cleanup, soil removal, monitoring, we take that into account from a development and construction standpoint. A lot of the emissions and the sort of post-development environmental concerns falls to our tenants, because we develop the building and they will handle their own operations and any permits and regulations, compliance with regulations after that. So, you know, depending on what that use is and what they're emitting, they have to have, you know, certain equipment and certain monitoring levers in place. And you know, on the front end, we're making sure that they know that they have to comply with that, even, you know, as we own the building, but largely the tenants are taking the lead on that.
Okay. Any others, Chris?
Nope, that's it for now.
Okay. Another question, and something I've been thinking about, for those of you on the call who don't know, the Georgia Council's offices are downtown Atlanta at Georgia State University. And since March, I still try to go in most every day to the office, and it's almost a ghost town downtown. There's a lot of buildings, don't see any people. So, Mazeen, if you could talk a little bit about the commercial real estate market, not just for industrial space, but like office space in cities. What's going to happen, do you think, to all these office buildings where, you know, thousands of people used to work, but maybe now they're going to see, oh, I can work from home, and they're going to keep working from home? What do you see happening to all these buildings that are kind of empty right now?
Yeah, that's a good question. So I guess looking at commercial real estate in the 4 major food groups, starting with office and those buildings, I think we've all learned that virtual working can be done, and can be done efficiently to some degree. I do think that there was already a trend in place prior to COVID, where people were being more efficient and virtually working more, but using more collaborative space, and the square footage use per employee was definitely lower. So you get more employees and less square footage. So I do think that is going to be a negative for the office market, and there will continue to be you know, vacancies that will have to be dealt with there. And you know, whether those buildings are redeveloped, or whether they trade hands and are at a lower price point, and sort of the new user that buys it for a lower price can also charge a lower rent. You know, I think all those are on the table. On the apartment side, I think those apartment projects have performed pretty well throughout COVID, largely because of stimulus money, and home ownership is down. The trend towards apartments have been up, you know, pre-COVID. So I think that continues. And then on the retail side, I think that has been really tough. It's been tough. It was tough prior to COVID, and COVID really accelerated that. So if you're an unanchored shopping center and you're not offering that experiential retail, you're losing to the Avalons and the Pont City markets of the world, or e-commerce. So I think it'll be interesting.
Have you, within your company, have you any discussions about dipping your toe, saying, gee, if these prices come down far enough, maybe we'll get into that market and start speculating on buildings instead of land?
In terms of industrial buildings?
In terms of, let's say, hypothetically, a 20-story building downtown, it's empty now, and the price on it's very reasonable. Have you thought about getting into a space and saying, let's maybe explore this?
Yeah, so that's a very good question, and there are real estate firms out there that are opportunistic and will look at different product types. We have always stuck to our knitting, other than the office building that I'm sitting here. And here, this is our only non-industrial investment. Everything else that we've owned and invested in are industrial. And so we'll always stick to our core. So I don't see us doing that and operating it as office. But I do see us potentially looking at a failed retail center or a failed mall and redeveloping that as industrial at some point in the future. So that's definitely on our radar and something that we're studying.
So I've seen quite a few of those failed malls or plazas around, and the only time I can think of an example where it was repurposed at Armstrong University, which is now part of Georgia Southern in Savannah, they took a shopping plaza and they made it into part of the university, and there's college classrooms in it and things like that. Knowing the size of your typical buildings and sort of the configurations, how realistic is it to think you could take a shopping plaza and turn it into a distribution center? I mean, would it mean knocking the whole thing down, or would you be able to actually get in there and repurpose it?
Yeah, no, it generally wouldn't be. It wouldn't be feasible to repurpose it. But with a lot of malls, malls were selected. Their locations were selected by department stores largely, and these department store chains ran demographic analysis on household income, rooftops, and then sort of help mall developers pick their locations. So inherently, these malls are in very good locations, and they have a lot of surface parking and a lot of area that could work perfectly for an industrial site. And they have the built-in demographics for it. It's just that people aren't going to Dillard's and Macy's and JCPenney like they used to. They're buying more online. So the mall isn't highest and best use. So yes, a mall would have to be developed, and there would be also zoning challenges, right? Because if it's zoned retail, you would have to change zoning to industrial, and that can come with its challenges. Retail redevelopment is definitely being explored by industrial firms.
Okay. Final question from me, and then I'm sure we'll have some more teacher questions. What would you like to see happen or change in your industry in the next 5 to 10 years?
Yeah, no, that's a good question. I would love to see the trend of manufacturing and production continue to come back to the U.S., not only from a self-reliant standpoint, but from an innovation standpoint. Innovation, research, and development will ultimately always follow production and manufacturing, wherever that is located. So it wasn't that long ago that the U.S. led the world in manufacturing and production, and that's why we've led the world in innovation, research, and design. And I think if we don't change that, eventually innovation and research will follow production overseas. So I'd really like to see that trend continue in a big way over the next 5 years, bringing manufacturing and production back to the U.S. I think it's a good thing for the U.S., for its future, for our students. And secondly, I'd like to see our students be encouraged to pursue technical careers in educations and the trade. I think we've gotten away from that. I think if you talk to people in the construction industry, they'll tell you it's really hard to find good labor, partly because people aren't interested in construction anymore. Everyone wants to go get a 4-year degree, or they're encouraged to go get a 4-year degree. And there's only so many, undergrads in psychology or business or communications that are needed, but the demand is really in these technical trades, and with, more automation and data centers and, whatever, there's a need for electricians and people that are trained in operating and servicing complicated machinery and robotics. And I'd like to see, our educational community, employers encourage this of students.
Okay, thank you. Chris, anything else we got question-wise?
Yeah, are you guys at all involved in any of the sound stages that the production studios are building?
Yeah, no, so we used to have a portfolio in Stone Mountain Industrial Park. We actually developed that, and there were several film studios that leased from us on a short-term basis, especially after the Great Recession. But most of our product now is further out. It's more of your traditional distribution facilities, and they've just been too far to travel. They're not in town. But
Sure.
yeah, people have been successful with some leases to movie production studios.
Couple of questions sort of wrapped into one here. Does your firm see, how does your firm view automation of manufacturing in the state of Georgia? Does that have any effect on you?
It's not a direct effect, but it's something that our tenants continue to consider and advance. So it will be, it'll definitely be located in our buildings, and we're already starting to see some of that. I think it's starting with the Amazon and the Home Depots and the Lowe's and the larger companies, but it's definitely part of our industry, and it's coming.
And then also in that group of questions was one, does your firm see a disconnect between the technical labor supply and the demand in Georgia? I know we've heard a lot about that on our manufacturing tours, but have you guys experienced that as well? Sort of just hinted at it.
I think it's a problem. Our tenants they're making selections based on skilled labor. And if you ask a warehouse manager, we ask this. It's our number one question when we're touring facilities or talking with prospective tenants. What's your number one issue? And it's always labor. So I think there is definitely more work we can do there, and it is a concern for distribution and mainly manufacturing.
I have more of just sort of a fun off the wall question. Like we tend to think of chief financial officers and chief operating officers as like numbers people and stuff like that. But what's something about your job that we might not know you do, or like what's a weird quirky thing about your job that we might be surprised to learn you have to do and keep track of and stuff?
Yeah, no, that's a good question. So yeah, obviously as chief financial officer, I do oversee accounting and tax and those types of functions, but I'm also involved in a lot of the company's overall strategy. So when we're looking at acquiring a building, I'm part of those discussions whether we are looking to divest and sell some non-core buildings or land. I'm part of those discussions as well. What markets do we want to be in, in the next 5 years? So it's not just sort of the dry debits and credits, but there's a big strategic part to what I'm involved in, and frankly, that's the best and most fun part of the job.
Cool. All right.
Mazeen, I do have another question, and you may not know this off the top of your head, but how much land does your company own, like acreage-wise?
Yeah, so we're around 3,000 acres.
Okay. And that's across the Southeast, not just Georgia specific?
It's mainly in Georgia and Florida and South Carolina.
Okay. Are there any plans to get into like Texas or you mentioned Little Rock, Arkansas, like sort of expand to the west? And I know they're not exactly Southeast Sun Belt, but I think a lot of those states have similar kind of business ideas as Georgia does.
Yeah, no, you're absolutely right. They do have similar demographic trends, business fundamentals. We're a very hands-on company, so we manage everything that we own. We manage the construction process. So, Texas, Arkansas has always been just a little bit too far. If you had to get in, if you had to drive somewhere, you hopefully do it in a day. So it's sort of kept us at ACC and ACC markets. Not to say that we wouldn't consider expanding for the right deal, but there's plenty of opportunity in the Georgia, Alabama, Carolinas, Tennessee, realm that we haven't expanded there.
Okay. All right. All right. Mazeen, I cannot thank you enough for this. This has been fantastic. I know as a former teacher, there's a lot of stuff in here you've mentioned that I would use in my classroom. And I'm sure these teachers that are on the call today are going to be using a lot of your information in the classroom. Is the PowerPoint, other than it being on the video itself that we're taping, can they have access to this PowerPoint, or is this something you want to keep in-house?
Sure. No, I'm happy to send that, and please don't hesitate to reach out as you guys are developing content. I've got my contact information here. Happy to provide resources or be a resource.
Okay, fantastic. So thank you so much. This has been great. And teachers, I want to thank you. If you've not done so in the last couple of weeks, please check our website because there's a lot of new workshops we have coming up. Next Tuesday, we have one on elections. And Chris, if you want to speak to that a little bit.
Yep. Election economics with Brett Berkey, the gentleman out of Florida who wrote some of the lessons that he's going to be modeling the Tuesday after that. Martha Rush is back doing a lesson on taxes, a virtual lesson. Tuesday after that, we have a U.S. history lesson. And then you probably want to mark your calendars for sure for October 22nd. That's going to be Amy Hennessy and Princeton Williams doing their economics of the pandemic. And I've seen that. I saw it like sort of behind the scenes at a GCSS thing, and it was really good. One last thing I'll mention, then we'll let everybody go, is so as of this workshop, we have now hit 2,950 teachers for the year. At some point in the next few weeks, we're going to hit number 3,000. And if you are the 3,000th teacher to enter a workshop, you're going to get a $300 Amazon gift card and confetti and fun stuff. So that's going to happen within like the next 3 weeks. So sign up for stuff. And yeah, so that's a really exciting. We don't hit that number very often. In fact, this will only be the second time I think we've hit it that I know of. Maybe the third. So it's a big deal. All right.
So,
thanks,
thank you.
Mazeen. We appreciate you.
Thank you, Mazeen. Appreciate it.
Everybody, it was good meeting everybody.
All right.
Thank you.
All right. Thank you.